What's up, guys? It's August 28th, 2024. Had a nice day today for the Bears. That breakdown wasn't really a breakdown because we're still in the range, the daily range here. Sold off the 19th low, well, almost a couple ticks above it. And there's a big tail on the bar, so it's not the strongest bear bar. It is a implied wedge bottom, 1, 2, 3. I think bears want to tag the daily EMA. I'm going to mute this, give me 2 seconds, and then we can get started here. Okay. So, yesterday we had a couple legs higher and a sideways price action. More in range bound than trending yesterday. 2 legs higher, leg lower, sideways, and then we're at the upper. We ended trading at the upper half of the trading range yesterday. So if we broke this down into 2 or 3 parts, we close at the upper half. All right, here we go. Bar 1, bulls wanted to reverse higher, but bears sell at the EMA. Bar 2, bears starting to break out below the lower time frame EMA. Bar 3 breaks the higher. Bar 2 is trend line break. Starting to go more sideways and down. Big tail bar 2, big tail bar 3. About to overlap. Bar 4. Bar 5 is a good bull bar. Bulls may try and buy that for reversal, but look, there's a big tail next to 3 big tails below the EMA. So I think it'd be better to wait for multiple bull closes before you get long above the EMA. We start to go sideways. It's really easy to get caught up in here. Tight trading range for the first hour of the day. Bar 15, we break out below that. And, it is a good breakout, but look, from here to here, that's really how much we're breaking out. So, yeah, we're breaking out, but it's not the biggest breakout. 14, really, it's good follow through. Look out. So, if we were going to measure the breakout past bar 8, 14 is breaking out of, 16 is breaking out 15's range way more. That makes sense. Still a lot of overlap. Didn't have a strong close. But it is a bear bar that's breaking out past a lot of bars. So on a 10-minute chart, this is 1 bar. On the 15-minute chart, this is also a breakout. And 17, bears start to get their second leg down. Second leg down from an opposite bar perspective. We still haven't had a real trend line break. The high of 17 is 29.75. So 17 and 18 have equal highs, but we're not piercing the high. So like the leg counts can be opposite bars, or it could be the previous bar's highs broken. So leg 2 from an opposite bar perspective, but we still have a trend line intact. 19 sells off. Good follow through for the bears. Then we start to go more sideways. 21, I took profits here. 21, big bar, 3 legs lower, leg 1, pull back, leg 2, pull back, leg 3. 3 opposite bars. Look at the high of 19, how it breaks. Excuse me, look at the high of 20, how it breaks 19's high. So 19's high is 24 even. The high of 19 is 24.25. Excuse me, the high of 20 is 24.25. So bar 20 above bar 19 by 1 tick, breaking the trend line. So you could say that's the start of the leg 2 right here. We go more sideways. It breaks out. And then look at 24. Breaks the high of 23. So now from a trend line perspective, there's your leg 2 broken. I was counting opposite bars, so leg 1, pull back, leg 2, pull back, leg 3. Then from the high, the previous candle's high being taken out, leg 1, pull back, leg 2. And then when 24's high gets taken out, that's it. Bam. Leg 1, pull back, leg 2, pull back, opposite bar. So there's your 3 types. So there's 2 different types of ways I counted right here. I'm not trying to confuse you guys. I'm just trying to, you have to know how to count both ways for it to make a little more sense. I do opposite bars because it's simpler, but I'm still paying attention to how many trend line breaks we're having. And look, on the 3rd trend line break, we went more sideways. The pullbacks got very deep. Bulls go for a tag of the EMA, but it just ends up becoming a double top. Or you could even say it's a wedge top. 2 seconds. Let me put this. wedge top is here, and there's another wedge top here. Not good to buy if you're trying to buy a dip. It's not very good to be buying this dip because there's two open gaps already. So you definitely want to see bulls closing gaps before you start buying the dip. There's your gaps. I thought there was one more. I guess the low here is 24. The high here is 24. That's negative. Huh. Okay. So two gaps anyways. So gotta wait for at least one gap to close before getting long. Bear flag gets a bear breakout. And look at the bars, how they grow. So it's a small body, 31, bigger body, 32. 33 is opposite bar. So we can start to count legs. In ranges, it's best to count implied legs. So leg 1, pull back leg 2, pull back leg 3. Really big tail on 34. Not good for the bears. Bulls are buying lows. Bears are taking profits. 35, good for the bears. Good close. It's a trend bar, but still a tail. So there are buyers. Bulls are trying to buy support. We're coming to the daily range lows. 36, inside bar after 3 legs lower. Leg 1, pull back leg 2, pull back leg 3. Leg 1, pull back leg 2, pull back leg 3, pull back leg 4. Up inside bar in the lows of a trend. Bulls get a 4-bar micro channel. 37 has a big tail. 35 has a big, 37, 38 have tails. 39 has a good body, but it's not breaking far above these tails, and it also has a tail. So there are sellers at the EMA. You might get short on 40 thinking it's a opposite bar to the EMA, but look, this leg has a bull gap, so it's strong enough to get its own second leg. And the second leg doesn't have to be symmetrical, just to be something. And that second leg comes here with 41. Bulls start to get the breakout. 42, 43, 44. More sideways price action. And we got another type of the higher high, double top, bear flag, whatever you want to call it. The idea is that bulls that bought here buy more here, and they get out at the original price. So they make a scalp on their second entry. They make them break even on their first, and that creates enough pressure for another sell. This is the first pop above the EMA after a strong trend with 2 gaps. So it's a buy. It's a sell setup. It's not a buy setup. Sell 45 goes more sideways. We're in a range. Here's the start of the second leg. Deep pullback testing. There's a gap here. 49 sells off. I remember I was short on 45 and I held because I had a feeling this reversal would fail at the EMA. Breakout gap through the EMA, and then bears get another leg lower. 49, 50, 51, 52. Starting to sell, make a new low, and then the market gets climactic. I was in this. I got out on 54. 55 looks like it's good follow through, but you have to ask yourself. But look at look at look at these bars. Look at 50, look at 51, look at 52, 53, 54. So what's going on? The bars are growing. In small pullback trends, the bars don't grow like that quickly. Small pullback trends have average size bars that stack for a very long time, trapping traders because they always think it's going to reverse. This is a lower high and the bears are becoming climactic because each bar is bigger to the previous bar. So this bar is bigger than that bar is bigger than that bar, that's bigger than that. These are about the same size, but the market's growing. So what would 55 have to look like to keep this pattern up? It would have to be huge. And not saying that can't happen, but this is more reading of climactic price action. Leg 1, pull back leg 2. We start to go sideways for a while. Bulls get a strong breakout. Why did bulls get the breakout? Well, we're in a range. We're in a range on the daily. So bulls must be looking at the daily chart and buying lows. We've had a lot of bullish pressure. This is a nasty open, kind of like a gap down. Not really. It's a weird looking gap. We'll see what happens. Oh yeah, I just wanted to update this with you guys. I forgot to add a gap here. There's been a gap here this whole time that we didn't draw. Here. Draw that there, draw that there. Okay. Safe. So yeah, you see these gaps, and then bulls are buying low, strong breakout. They get 1 hour bar 64 from that. asking for 2R after a lot of selling. You know, you can do that, but that's hard. The market goes sideways again. Oh, excuse me. This here, we can see a wedge top, and then it sells off. So leg 1, pull back leg 2, pull back leg 3, wedge top into the EMA, leg lower, closing. Bears, bulls close on the EMA. Nice day. We had a breakdown, and then the range after this breakdown here had more selling pressure than bull pressure. So this is a range that had more selling pressure because the previous trend influenced it. It was a breakdown. We went sideways into the EMA and we broke out of this range. So from our market cycle, range, breakout, opposite bar, channel, 3 legs lower, 1, pull back leg 2, pull back leg 3, and then what's that? Market cycle resets with a range, and then we break out of that range with here, break out here, that range, first opposite bar equals channel. We go more sideways. What happens here? The market cycle resets with the breakout, deep pullback equals channel. Then we have 2 legs higher, leg 1, pull back leg 2, or leg 1, pull back leg 2, pull back leg 3. So what's that? We're in a range again. So you see how the market cycle is. It is extremely important to understand the market cycle, and you can start to trade around it. I like to trade breakouts, and I'm going to be focused on breakouts for a very long time. Hope you guys, just try and focus on one thing. You know, it doesn't have to be breakouts. I do breakouts because that's the start of the market cycle. But if you're a range-bound trader, then just take range-bound trades until you understand them like the back of your hand. You know, you have your whole life to build your repertoire of trades. Get really good at one thing. Understand the market cycle from one perspective. And I don't mean my perspective. I just mean like I'm studying the market cycle through the breakouts because that's where it starts. You know, you're more than welcome to study ranges, but I would say that's a little bit confusing because the market cycle starts with breakouts. So if you started with a range, it'd be you'd be learning the end first. If you check out Albert's course, it's written in the form of the market cycle. So, you know, there's some method to his madness. I study Al Brooks. I study Ali. Thank you for your support. Check them out, guys. Have a good one. Thank you. Bye.